update from Magellan on Trump, tariffs, and why investors should look through the noise. My name is Elisa DeMarco, Investment Director at Magellan, and today I'm joined by Arvid Streimann, Head of Global Equities and Portfolio Manager. Welcome, Arvid.
Great to be here, Elisa.
Thanks, Arvid. So as we were expecting heading into Trump's second term, Trade War 2.0 was on the cards. Last week, Liberation Day, Trump put out the information that we were longly awaiting for. So the market has sold off almost 10% over the past week. Clearly there are concerns about a deep recession, stagflation. What are you thinking?
Well, yeah, it's a really interesting time, Elisa. I can certainly understand why the market sold off a lot because Donald Trump is injecting a large amount of uncertainty, and you just have to look at what's happening to consumers. Consumer sentiment's down a lot. You just have to look at what's happening to businesses. Business confidence is down a lot. You just have to look at the market. I would say that investor confidence is down a lot, and you just have to look at what's happening on the diplomatic front. I would say that there's a lot of diplomats around the world which are scared. So everyone is scared here from Donald Trump, and you know what? This guy wrote the book, The Art of the Deal, and I think that what he's trying to do is to exactly scare people. So it's a tick for him. He's got people right where he wants them. But when it comes to what he's going to do with this strong negotiating position which he's created for himself, it really comes down to what he wants. And I would say there's two things which he wants. Number one, he wants strong growth in America. Number two, he wants reshoring to America to occur. And if I think about those two things, I think that he is in a strong position to be able to do that. The question now comes down to the execution. And I'm confident that he will be able to do that. And I'm confident that we're not going to get a worst case scenario of a deep recession. Why? Because like every single politician on the face of the planet, I don't think Donald Trump wants a deep recession. Small recession, I think he'd be okay with if he gets what he wants. A deep recession, I think that's a no-no for a politician like Donald Trump. Importantly, I think that Xi Jinping, who is at the other end of some of these most pointed negotiations, doesn't want one either. And if I look at what Donald Trump's done throughout his career, he's a tough negotiator, but there's a reason why he's become a billionaire or he's very rich, is because I think that he's actually quite good at it. And so I think that he would be in a very strong position to get what he wants for America.
Thanks, Arvid. I hear you there, but what gives you confidence that he's going to be able to get the deals done this time around, both within Congress and with his trade allies?
Yeah, so there's a few swing factors here, Elisa, which I think are really important for investors. Number one is what happens to the US-China relationship. And the US has obviously put down what it wants from China in terms of those a narrower trade deficit to put on some tariffs. And China, not surprisingly, has just put them straight back onto America. At the end of the day, both of these leaders, I think, know that the world's decoupling. They're decoupling from each other. But I think what they don't want is that to happen too fast. And so they're both incentivized to not have that happen too quickly. And the way that they get to that outcome is to talk to each other. Now, I think there's going to have to be a little bit more pain before they actually start talking to each other, but I do think that there is a pathway here because of that mutual desire to have a slow decoupling, that they will get a deal in some form. Okay, that's number one. Number two is I do think that the US government will introduce some stimulus at the fiscal level. And if you just look at what's been happening in the Republican Party, I would say that Donald Trump's got a pretty strong hold over that party. And that party has the numbers in the Senate and has the numbers in the House of Representatives. So I'd say that eventually you're going to get some sort of fiscal stimulus. I know that the US government is cutting jobs at the moment, that's bad for growth, but I would say that money's going to come back into the American economy when they get their hands on it and they get that budget passed. So I look at those two things. I know that there's corporates that are investing in America. I think that's interesting, but I don't think that that's a game changer. But I do think that Donald Trump is shaking things up. I think that he has the power in Congress. I do think that the Chinese and also Donald Trump don't want a deep recession. So I'd say that something's going to occur here which is going to be positive. The uncertainty is how long it's going to take before we get to that point, and I think that markets are really reacting to that uncertainty.
So it sounds like short-term noise, but over the long term you have high conviction in the growth opportunity. Does that mean that you're leaning to this market weakness?
Yeah, look, Elisa, I think that as investors, when you see what's happened over the past week or so, and you see the amount that share markets have fallen, you really have to ask yourself, has the valuations of the companies fallen as much as what the prices have? And it's really these types of market environments which scare a lot of people, which we look at as an opportunity. And we've spent a lot of time at Magellan looking at and analysing company quality, and we've already done that, so we know which companies are quality. That hasn't changed. We spent a lot of time at Magellan looking at company valuation, so we're ready to go on when those opportunities arise. Now, not every stock and company has fallen by the same amount, but I would say that there's clearly some really interesting opportunities that are out there, and we're ready to go on there.
And how then are you positioning the portfolio?
Look, I think that with the Magellan Global Fund, as you would know, it takes at least 20% less risk than the market, and so that's served us very well, and I'm very happy to say that the portfolio is doing exactly what we'd expect it to do in a market volatile situation that we have right now, which is to outperform the market. And so when we're thinking about when we might deploy some of that risk into the market and how we might lean into things, I think it really comes down to getting a very attractive valuations, and some of those are coming out at a company level, but also getting some certainty on the economic outlook. And we're not going to get that to the degree that everyone wants. That's why people are worried and why markets have gone down. But I do think strongly that you have to look at the long-term earnings potential of companies and really ask yourself, has it declined as much as the share prices have? And I think in a lot of situations the answer is no.
Thanks for your insights today, Arvid, and thank you for listening. Please feel free to share with clients and colleagues.